So the markets are recovering nicely. S&P is bouncing. The NASDAQ is ripping like nothing we've seen before. And most investors are sitting on the sidelines, scratching their heads, wondering, is this actually going to hold? Or is this basically a rally that I missed out on? But the rich, they were loading up along with the hedge funds as much as they'll tell you and show you in different things. And now they give you articles like this that they were basically loading up weeks ago. Well, then once these articles are out, guys, it is already too late to get those discounted prices. Those prices are gone while everyone was panic selling, creating that environment. We came out when the bear market officially ended, when we got back above the 20% mark, and we're saying that this is the time to buy. If you guys missed out on that video, make sure you guys are subscribed to the channel so you don't miss out on key calls like that anymore. However, in today's show, we'll be going over what triggered this rally, why smart money got in early like they always do, and how you can still profit, because guess what? Even though JP Morgan and Morgan Stanley are saying this stuff over here turns bullish and mostly on assets except the dollar, and we'll talk about why that's important, because the dollar was actually a big weighting negatively into earnings, so it's going to be really, really important. But again, I want to remind you, the purple line over here is the S&P's 2020-24 close. We're barely even green on the year. You're basically guaranteed the 10% gains that the S&P has to offer, and it's half the year. So guess what? All you got to do is basically buy. There's no real magical secret about it. Yes, you're not going to get the discounted prices. And you'll have people saying, oh, that this is not going to hold, that this is not going to rally. We're not going to get back above the 50. We're not going to get back above the 200. They were all wrong. Smart money was loading up. Just look at the volume, right? Smart money can hide price all they want. They can't hide volume. And we talked about this extensively. If you guys missed that, make sure you guys subscribe to the channel. Hit the like button if you're enjoying this thus far. But again, this is where markets are made, where volume is. Once we saw this capitulation phase that we were looking for on that big drop, we got the capitulation volume, and then subsequently, look where we are now. You would have made buying at when we got out of the bear market, you would have made 20%. That's 2 years of gains in 2 months. That is absolutely insane. But here's the thing. It's actually not even over. That's just the beginning. That's literally the beginning. There's so much that has been discounted extensively. NVIDIA, even though there's Fed tightening fears, that there's no rate cut fears, right? All this fear is being pushed into the market so that you don't buy. It's simply put, and this is an interesting article from Bloomberg here that I have up, is that smart money loses to retail crowd that bet Epic on a stock rebound. And this was kind of funny, considering they were actually buying the bottom, and hedge funds were buying, and AI was buying, and retail was buying on the way down. So that was pretty amazing, even though a lot of hedge funds were kind of actually selling. So this was a little taking the script and flipping it on its head moment for the markets. But so-called dumb money, who got the last laugh there, embodied by retail traders, didn't see things that way. To them, the stock market was suddenly on a sale. Even though they want to tell you this, again, a lot of people weren't thinking that, and maybe you weren't thinking that. Anyway, we talk about this on the channel extensively, and if you guys want to understand why this is wrong, simply put, 0 to 12 for NVIDIA, as the latest article with NVIDIA, and I'm going to take a little bit of sidetrack here to talk about NVIDIA and why its earnings that just got released moments ago are absolutely bonkers crazy. We got this prior to its earnings. NVIDIA supplier resolves AI rack issue just in time for earnings to boost sales. So again, they're basically talking about NVIDIA supplier accelerating production of its flagship AI data center racks following a resolution of a technical issue that had delayed shipments as the U.S. chip maker intensifies its global sales push. This is Blackwell. This is the guidance that we're going to be looking for. And again, it's an insane time to be alive. It's an insane time to invest in NVIDIA as they basically dominate the artificial intelligence sphere. So it is a great time. But again, some of the other characteristic things that sparked the turnaround that we could say that we sparked this flipping of Morgan Stanley basically being bullish was the lower CPI inflation that was read in April. We predicted that number considering what oil prices were doing. We've covered that extensively on this channel. Again, we can go jump real quick to what oil prices were doing so you guys can see it firsthand. And it doesn't take a genius to figure this out. Oil prices, the blue lines right here are what oil prices were doing the previous month. If you're not in the blue lines, it's going to be negative. Pretty simple. Again, if you guys want more of that, make sure you subscribe to the channel so you guys catch those CPI videos when we put them out. Prior to CPI, what we think we're doing, and also a weekend deep dive video where we give you 2 videos where it's the short and sweet version of kind of like a condensed thesis of what you need to know for the week, and a long form discussion video they can listen to on the coffee, listen in the background. It's a fantastic time. So make sure you join the Discord as well. Link in the description below. So make sure you check that out. But again, what really sparked the recovery was also Powell kind of not hammering us super hard, but we saw the Fed is becoming a point of contention for the market. They are not necessarily giving you the bullish sentiment that we want. Again, that's resonating inside of the expectations for the Fed. In June, we have no rate cut. In July, we have no rate cut. In September, we have a 50-50 basically chances. I look at it right now of a rate cut. So that's when the hopes really start. And then we go into October where, okay, 1 or 2 rate cuts, finally ending with December. That is currently sitting at 2 rate cuts as the majority, maybe possibly 3. Now, mind you, we were at 6 at one point. I would also like to remind you that the CPI, the PCE inflation is coming out on Friday, which is currently expected not to have expectations yet. You gotta love that with them. But again, 2.6 previously, 2.3 previously on the PCE core was 2.6. I'm expecting 2.4 and 2.1. Again, that number is going to be extremely close to the inflation number, or sorry, the 2% inflation target the Fed has. So again, that is going to spark a debate whether the Fed needs to start cutting rates now. And will that spark further buying in the market? I would argue yes. So why did smart money get in? As always, they get in when basically everyone's screaming bloody murder. So you can look at the fear and greed index, right? We talk about this extensively. The thing hit 3. Like, I don't remember the last time that ever happened. We were basically getting every number in the alphabet from 15 to 3, and we were all making a joke out of it on the channel. So make sure you guys, again, we're subscribed to the channel, so you could have caught that early on. Again, I do expect NVIDIA to basically take all these shorts out for lunch and eat them like a short sandwich. So again, when everyone is telling you, go that way, you should be going that way. Kind of worked out for those that bought at the bottom. Again, I still think there is a 20% run on this market going into the later half of the year. But let's say you do not like necessarily those risky plays. We did cover a video just recently on JEPQ, which again, link in the description below. You guys can check that out. But JEPQ, for all those that don't know, it's a covered call ETF. JEPQ or JEPI, sometimes called, is an ETF that delivers monthly payouts with strong NAV support, which is essentially, it gives you a high yield based on the options it holds, and it also has downward protection because it is a covered call ETF. What that means is as the market goes down, those calls are less in value, making the fund itself more valuable, so it offsets that movement. If you don't necessarily like cover call ETFs, there's things like SCHD out there that are extremely at bargain level prices right now. So again, they're gonna give you a lot of bang for your buck. I personally like SCHD. That is just an investment that I like. It's trying to break above the 50-day moving average. There's gonna be a large price movement to this $28 point. So make sure you guys get in. Again, not financial advice, but I do see a breakout similarly how this lagged behind the broader market. It is now its turn. People are going to be like, okay, give me the new and shiny stuff. And then I want to go back into the passive income stuff. Again, that is where stuff like SCHG, JEPQ are on the forefront because they're constantly iterating and constantly innovating in order to give you the highest yields and the highest growth. Just saying, this is looking like it's about to break out like the market did moments ago for the broader market. So again, this is where things really get interesting. And if you really want to be like that old classical person, we can also talk about T-bills. Again, yields are not necessarily doing much. Again, they're stagnating because At some point, people are realizing that the bond yield is way too high. I'm demanding too high of a premium. I need to demand less. So it's just kind of been forming this basically tranche right here between 4.6 and 4.2. Once the Fed cuts rates, essentially you have a ceiling right now, and that ceiling is this 4.6 number, and then the 10-year has to go lower because no one's really betting on the Fed hiking rates in the longer term yield. So again, the 10-year, the 20 and 30 are not necessarily the best investments right now. The dollar weakening is going to be extremely powerful considering that it provides a floor for companies to exchange currency. So when these big mega global companies transact throughout the whole world and they convert those currencies back into the dollar, they are going to actually get a benefit from that. They're going to actually get positive headwinds from that, which will result in higher earnings overall. And as always, Bitcoin just going through the roof, broke out of the wedge, trying to tackle that 115 barrier. Again, if we get bullish spark from NVIDIA, as its earnings have just been reported, we are definitely going to get an insane rally. And that's probably going to be the play of the week. If you want, you could also do 450, 460 calls on the NASDAQ. You could basically do a spread through that, sell the 460, buy the 450. 3 weeks out, and basically at a $3 cost that essentially is a defined risk. You know the time frame you have to be right, especially going into NVIDIA. So it's going to be a really easy play. Make sure you guys tune in for the live stream that we're going to be covering NVIDIA's earnings later tonight. So make sure you guys have that game plan written down. Retail waits, smart money acts. The rally has started, but that doesn't mean that the opportunity is over. There's going to be plenty of opportunities, guys. In fact, it's beginning if you know where to look. Again, S&P just broke green for the year. Historically speaking, 10 to 15% rally. Just go buy the S&P. It's really not that hard. And then again, subscribe to the channel right now if you want to buy in early before it's too late. And drop a comment down below. Are you buying this market or waiting for the next dip that may not even come? Again, thank you all so much for watching, and I hope to see you in the live stream tonight.